everybody, and welcome to Trade School. Today is Friday, the 7th of February. That is a tough word to say in the English language. February. Whoever designed that word should be taken out back and shot. Okay, how is everybody doing out there? Welcome aboard for those of you that are joining me live today. Probably just a couple of you in the middle of the day like this. Most of you are probably joining me on some type of replay or trolling through the archive trying to find interesting topics. And today we do have an interesting one. We're going to be going over trading strategies today, which is something I think everybody likes to do. We spend a lot of our time going over topics which are, I guess, more fundamental, like how to set up stops and what volume is happening out there, and things like, you know, just different techniques like the RSI Laguerre or maybe volume profile, those kind of things. Today we want to kind of put some things together with you for a couple of trading strategies, because guess what? We do have a trending market for the last couple of weeks, which is, I have to say hallelujah. Finally, we have a swing to the upside that we can play within. And so we need to take advantage of that as much as we can in the near term. So hello, everybody. If you're joining me live, let me know if everything is working okay. And if we do have audio and video and all that stuff is working okay. Otherwise, this will be all for naught. Let us get going here. I'm going to go over to the split screen. I'm down here in the lower left-hand corner. If that gets in the way, let me know, and I'll remove myself. Let's make sure we have audio working on this. Yep, looks like we're good to go on everything. So welcome aboard, everybody. Today is Trade School. We are going to go over trading strategies. So I'm going to cover just a couple of strategies today. Obviously, we can't cover all the different strategies out there. We'll just give you a couple of things that I've been working on lately. And one of the things that Mav and I have been talking about is that really for the first 2 years of this service, we've been much more about just the theory of things, the theory of trading, just the building blocks of everything, how do you go about your business, and why does the mind do funny things to us, those kind of things. And then I think those of you that have been with us for a while, I think you guys have gotten those points, and let's put, maybe we're going to have a little bit of a trend here coming up into this spring and summer of this year. So what can we do to make hay while the sun shines? Trend trading. So one of the strategies I'll talk about today is trend trading. It's meant to capture the large moves that are out there. So large moves, these are the ones you always see right around here, and then you go, wow, why wasn't I in all of that? And the second half of trend trading is, thank you, Mr. Penguini. Appreciate you weighing in and giving your opinion on that. Good, thank you. The second half of trend trading, so this is the good side here, right? And how many times have we seen this go all the way back down to a lower low? Lots of times, right? Just about every asset out there has done something like that over the last 2 years. So the second half of trend trading is people saying, hey, how can I keep most of this? If I get in this thing and if I ride this thing up, how can I keep it? Because what happens is up here, people say, well, I'm going to hodl. So this is where everybody says, I'm going to hodl right there. And then when the price comes down to there, they're like, well, I don't want to hodl anymore. I want to learn how to trade. And so this is something that you kind of have to figure out ahead of time. Now, if you truly do if you've got youth on your side, if you have time on your side, maybe if you're in your 20s or something like that, you say, look, I'm in this for the long haul. I want to be one of the early players. I have no intention of selling. Okay, well, that's great. And what we can do is you can use some of these strategies to help you perhaps get better buy points than just arbitrarily dollar cost averaging. So that is one thing that you can perhaps do with these strategies. But if you have a super long time frame, probably you're not interested in trading at all. You're just interested in finding ways to accumulate. And maybe you're more interested in fundamental research of what's behind the coin anyway. I know that's something that Mav is more interested in as well too. That's kind of the difference between us, is like I am much more of a short-term trader. I don't hold things all that long. There's a couple of assets that I do hold long, but most of them I'm looking for short pieces of edge in the markets, which is what we'll talk about today as the second part of our strategy. So that's trend trading. Trend trading is the whole idea here is to get on board early. And these always look so easy when you look at them in the rear view mirror. But I want you to ask yourself, if you were to just put the right side of your chart right there, would you really be interested in buying this? Probably not. You would say, I think I'm going to stand to the side and I want confirmation. I want to see how this is going to work out. And that's very common. So this is a strategy that once you adopt it, you have to fully commit to it, because chances are you're going to run between a 30 to 40% win rate with this strategy. And most traders might say, well, that's awful. That's atrocious. Why would you ever do that? How can you make money with that? The idea is that you're taking very small losses that are probably within the span of these Donchian channels, false breakouts, those kind of things. Although you wouldn't be trading below so here's a good example. Here's a buy as the price was above the 200-day moving average. And then here's a sell as the breakout shows false. So this is the sum total of what you're looking to risk, which shouldn't be that much, especially if you keep this within the rules of Hoyle about position sizing. But then when you compare that versus a Mongo move like this, your reward to risk is outrageous in this strategy. But you got to be in it to win it. You got to take every entry. And so you got to look at this 30 to 40% and say, okay, I'm going to commit to this, but I'm only going to use a little bit of capital every time so that I'm not going to get disillusioned and stop doing this. And maybe the other thing to do is that you don't want to be looking at a watch list of 200, because after a while, what happens is if you're watching 200 different coins and taking losses 70% of the time in these little tiny coins, it's going to be a drag, and that friction will just bring you down and make you just doubt what you're doing. And I guarantee you that you will not be on board when this thing hits. You will not be on board. That's just human nature. Okay, so that's trend trading. We'll get to the charts here in just a second. Swing trading is meant to capture swings, the value of the swing on whatever time frame that you're trending or trading. So what we're doing is, and this is what we'll go over today, is we have an anchor chart, we have a signal chart. If these are foreign terms to you, then check out the fractal energy trading class that I have online in the library. And I have a book coming out. The Fractal Energy Trading book is coming out soon. It's with a typesetter today, and it gets back to me on Monday. We'll go back and forth a couple of times and fix little things in there, and then hopefully it's going to be for sale on Amazon.com by the end of this month. So I'm hoping that we can hit that date. So here's the fractal principles behind the swings. What you're doing is you want to trade in the direction of the anchor chart swing, because rule number 1 states that larger time frames dominate the trend. And we can't even see this swing. We can just see the part of it over here of this swing. But here's another swing, and then here's another swing. So we can see these swings. So these are the signal chart, which is 5 times faster. You can see that the relationship between these two time frames is fractal. So there's approximately, within the span of a day, there's approximately 5 5-hour periods. So it's a factor of 5, family of 5 time frames. So we're going with a minimal set here, just with a 1x and a 5x. 1x being the signal chart at 5 hours, and 5x being the anchor chart at a 1 day or 24-hour time frame. Okay, so what we're doing is we're identifying a swing on the anchor chart, and then we walk over here to the signal chart, and we say, how can we get on board this bad boy? And quite honestly, the simpler, the better. So I've got a couple of things I've been working on lately that we're going to incorporate into this. And so we'll go over this dual pane swing strategy here in just a few minutes. Okay, everybody good? All right, so let's get into trend trading. First of all, so the idea with trend trading is to jump on board every time it breaks out. We'll define how we break these things out. Eventually, it will be the one. As I talked about, a win rate of 30 to 40%, you have to commit to the strategy. You can't just do it when it feels good and not do it when it doesn't feel good, because I guarantee you that the times where it doesn't feel good will be the time that it takes off without you on board. It's almost a certainty that that will happen. The better trades that you have will be the ones that don't feel good. So let's bring up the chart. So I've got a little instance of TradingView setting up here. Let's go full screen. Now let's do this. So I'm going to go back from full screen. I'm just going to go to, I'm going to set this up as, price and volume. Okay, so I'm going to start off with just a price and volume chart. Let's just go with Bitcoin. And maybe let's go with something that's a little less marked up, like Litecoin. Okay. So there's Litecoin, just price and volume. Now, the fastest way that you can get on board with this is if you go up to indicators and strategies, and if you just start typing in RSC for ReadySetCrypto. And what you'll see is at the very top of the list up there, you'll see the RSC Trend Trading Indicator version 3 by one of your fellow members named Tourage. I'm not sure how to pronounce that. That's just his username. And all you got to do is just one left click and boom, that's it. That's all there is to it. That is all there is to it. And that applies a strategy. And you'll see these little buy and sell. See the buy thing here? Okay. So you can see some of these buy and sell indications. And I'll walk you through what all these lines mean. Okay. So I'll walk you through what all the lines mean. Okay, so the first thing, I'm gonna hide the trend trading indicator for a second. All right, well now that's not gonna work. Okay, so let's go over what's in this, because there's actually a few pieces to it. So I'll go with the pink lines so we can see what's going on. There's actually 4 things that we're looking at here. The first thing is the 200-day moving average in the green. That's just a simple moving average. It's considered to be the mean of the price movement. Below the mean means that it's in a downtrend. Above the mean implies that it's in an uptrend. Okay, so that's the study. So Cryptomaniac's saying that's a study, but there's also a strategy on TradingView, which can be back tested as well. Awesome. You know what? I tell you what, Florian, I'm not sure where that is. I'm not sure where that is, because I've always just worked with the indicator itself. So that's the 200. The red line here is the 50. The red line is the 50 simple. So there is your golden cross as the 50 crosses above. Here's your death cross as the 50 crosses below. We don't really care about that much. Really, the main filter that we have here is the 200. We don't want to be trading long below the 200. So for a lot of you that are out there and have heard me say, like wait until the weekly chart starts to uptrend. This is kind of the same thing. If you have the price above the 200, more than likely the weekly chart has started to, at the very least, swing up. Now, if you want full confirmation of that, you might want to look at the weekly chart and ensure that that's the case. But this will get you pretty close to the bottom. This will get you pretty close to the bottom. And if you've seen some of the moves over the last 2 years, guys, you don't have to get the very bottom. I would wait until you get the meat of the swing, right? Just getting the meat of the swing is usually enough. You don't have to worry about getting 95% efficiency. Okay, so those are the moving averages. The other lines that are on here, the light blue or the cyan line here is the Dantian channel, which represents the last 20 days. So that's a 20 Dantian, and below that, I've got the 10 Dantian. So what we're using these for is buy and sell signals. So let's zoom in on this really quick. Okay, so what Florian is saying is if we go out here and if we search on RSC, he's saying you'll see it with a red and green arrow on TradingView. Ah, here's this trend trading strategy. Okay, so you can experiment with this as well too. You can add the strategy and then you can do strategy testing. You can do back testing down here as well too. Okay, so here's the indicator. The strategy is down here. Thanks, Flo. Okay, so let's zoom in on the first buy signal here. Let's zoom in on the first buy signal. And I do want to mention that everything that I'm talking about today is covered in the trend trading course. So what we're looking for is a combination of a couple of things. First of all, we're looking for the price to break above the upper Dantian, and it's got to be above the 200-day moving average. So that's the very first buy. Now, where's the sell signal for this? The sell signal is if the price touches the lower 10-day. So you might look at this and say, well, that's kind of a rip. You know, we got in up here and we took a loss on here, and that was just an intraday move. That's up to you. You can determine whether or not you will take a stop out if the price just touches that or whether it closes below there. So that's one of the things that I talk about in the program. And I would say the majority of most of the actual triggers that I see to the downside are just intraday touches where it just goes down there, touches it, takes out some stops, and then runs right back up again. So you could look at this and say, well, this second buy signal up here, you'd already be in this one if you just stayed in here. So anyway, it's going to just show both. So you have to make your determination as to whether you want to be a little bit more conservative and take intraday entries, which means you're going to take more stops, but it will save you if this turns out to be a big puke, right? If this turns out to be just a big, hairy, bearish engulfing pattern to the downside, you don't have to wait for the close of that candle. You can just enter intraday if you want. It's totally up to you, right? So this is one of many things that you guys have to figure out. But that's generally what's going on here is that you're getting in on the breakouts and you're trying to hold this thing. And look at this, you're in here at this point and you've got this whole big move. This is Litecoin, by the way. And so this was the 2nd of April. You're already in this. Now there's another one of these sell signals. And that would have saved you, if you'd taken this sell signal, that would have saved you from going underwater down here. So that would have been a close down here. You'd see all these closes down there that are below that. So it assumes that you would have sold out at that point. Here's the next buy signal. And you're in this one for quite a while. There's, again, an intraday sell. Here's your next buy. So again, if you want to be more conservative, well, I'd say less conservative. If you want to be more aggressive with this, you'd be in this one for quite a while. Now here's a definite sell signal. Definite sell signal. So that is where you actually change polarity on this time frame. Okay. So let's see if we have, so there's the price is below the 200 now, no signals, no matter what, no signals. This keeps you high and dry all the way through the bear, all the way through the secondary bear. And then boom, this is just a few days ago. Now, the one thing I was thinking about today is there's actually, if you want to be a little bit more of a trader, if you consider this to be the breakout line, a lot of times what you'll see is on breakouts, you'll see the price come back down, retest that area from above, and then take off again. So you can view this as the primary entry, and you can view this as a secondary entry. If you didn't catch it the first time, there may be a secondary chance to get on board this, but it's not part of the system. And also you have to ensure that that price level is above where the current stop is, and also above the 200-day moving average. So again, that's for more of you that are traders out there. If you miss the initial run off of here, many times you'll see a retest of that. Okay, so it's really it. There's no secondary time frames. You don't have to run multiple time frames. There's no anchor charts and signal charts. It's just meant to handle off of the daily chart. Now, what I talk about in the class is, like, if you want to run this as more of a swing trading strategy, you can actually run this off of the 5-hour or something like that if you want. However, you're going to get more signals. There's going to be more noise, and that's really the intent of this is to do that. So something else that you can do is, and I've talked to a number of you about this, like you can check this on hard right edge if you want to. You can just test yourself and just see whether or not, how would you handle this position. The thing or you can also do the replay. You can do the bar replay. The thing I would caution is that you'll see the Donchian bend to accommodate the forward price move. So you can start to see this. So if you're playing hard right edge, if you go in one candle at a time, you'll start to see that upper Donchian bend, and you'll say, oh yeah, I would have got in there. So it's not really a true test sometimes. But the whole idea behind the trend trading strategy is that this is super simple. It's meant to get you on board a trend. It's very mechanical. The only discretionary point that you have to figure out, and you have to do this ahead of time, is to determine how you're going to handle the stops. Will you take them intraday? Maybe you don't have the time intraday. Maybe you work a job and the candle closes around the time that you're home at night, so you're just going to make an end of day decision on this, come what may. And that's quite honestly the way that I would recommend doing most of this, is do end of day decisions so that you're not caught up in the volatility during the day. You don't care about that. This is meant to be one of these strategies where you just sit back and it's mechanical. So at the end of the day, are you buying or selling? And that's it. So these also can be, if you do this, these can be, let's see, if we go through here, you can add an alert on this indicator. And so the condition is going to be, you don't want the price, you don't want the volume, you want the actual strategy. So you're going to pick the strategy, and whenever it hits a buy signal, and you can also set this up for the alert for the sell signal as well too. Now, what Flo has done out here is he's added the webhook. So what this will do is this will publish to the, what's this called? It is called the webhook alerts channel within Discord. So if you want to just monitor that, you'll see all kinds of stuff coming out in here. So what I would do is on the message, I would put as descriptive a message as you can for these. So a couple of things that I would do, don't set this up with more than just a handful of assets. Yes, there are going to be some assets that you've never heard of before that will pop, and you'll see them after the fact. All of a sudden, you'll see everybody in Twitter's talking about a certain coin and like, oh man, I wish I'd got on board that. Oh, if I'd only put that on my scanner. Well, it probably wasn't on your radar because it was probably below the 200-day moving average and it was still in a downtrend. So don't worry about that. Look for the next signal. You don't have to get the very first signal. So the only the only converse to that is, I would say, let's see if I can find one here that's really blown up. So actually, okay, let's look through a couple of these. Some of these have really just gotten sky high, and I wouldn't chase them. So here's a good example, like Ethereum Classic. At entry point was 533 or so, and right now it's up. I mean, it's more than doubled. So could that keep on going? Yeah, it can keep on going, can do whatever it wants to. But at this point, I'm not sure that I would take this buy signal here. I would wait for something to pull back a little bit. Some of these have really gone berserk lately, but some are very close to the bottom of their patterns. Here's Stellar versus USD on Coinbase has just started out. And so this would be a re-entry, potential re-entry if this retests that level again. Here is Chainlink is just going berserk today, fired another signal today. This one was already long, but if you weren't long, this would be the next signal. This would be the next signal. So you can do it that way if you want to. Here's 0x is just fired yesterday. Just fired yesterday. You can see the previous signal, and that one got stopped out intraday. Otherwise, you'd still be in that one. Here is Basic Attention Token. I'm mostly going to keep my candidates that I look for here to be the ones that are available on Coinbase and major exchanges. I'm only going to run about a 20 asset watch list. Okay, so let's see. Florian is saying, to get the webhook to work, the message has to be in a specific format. Just buy won't work. All right, so I'm going to have to look into this a little bit more, and maybe we'll do this on the next trade school to show how to set up these things, because I've got a little bit of research to do. Okay, so here's another one. Here is Atom versus the US dollar is showing potential buy point today. Okay. Zcash, again, just recently broken out. Each one of these new bumps is a new buy signal, or just to maintain. Okay, so you can see some of these. This one, like Algo, doesn't even have a 200-day moving average. Doesn't even have a 200-day moving average. So you can look at this and say, well, this is a breakout above the upper Donchian. It's above the 50 because this thing hasn't been alive for more than 200, at least on this exchange. And so maybe I'll take that breakout. Okay, so these are real simple. So what I would do is get the indicator or get the strategy, whichever one you want to, and start experimenting with it and learn how to set up the alerts so that you know when something's happened. There's nothing worse than finding out after the fact, oop, there it was. Okay. Thanks, Flo. I'll go through the PM and get myself educated on setting up the alerts in the messaging for that. I think that's a good thing. Okay, so let's move on to the next one. So unless there's any questions about trend trading, let's move on to the next one. Shall we? All right, let's minimize this. Okay, so swing trading. Guys, there's an unlimited numbers of ways that we can create a swing trade strategy, right? So I had that whole course, the short-term trading strategies, and that was mostly around single time frame, just the traditional oscillators, momentum tools, channels, moving averages, support and resistance, those kinds of things, right? So just the very basics for this. My preference is to use fractals, is to use multiple time frames and use that because it can be very powerful. Now, there's a couple of ways that we can do this, which I'll talk to you guys about. So the idea here is that we want to trade inside the anchor chart swing, which I'll show you in a second. We could do this off the anchor chart itself, but we can fine tune the entry with a signal chart fractal pair. Let us go over to, let's see what I got here. Okay, so here's what we're going to look at today. Let's get rid of the watch list. We've just got Bitcoin versus the US dollar. And what I have here is a couple of things, and I'll walk you through this. So I've got the daily chart that's over here. This is also my anchor. Daily chart is also the anchor. All right, bear with me here. Anchor. This is the 5-hour chart. So this is a 5-hour, and this is the signal chart. SIG. Okay, so Flo is also saying the alerts only work with the indicator and not the strategy. Okay, thank you. Man, it's good to have a programmer that knows what they're talking about. Tell you what, Flo is the best. All right, so that is what we have here. We have a daily chart on the left-hand side. This is our anchor chart. We're going to trade in the direction of the anchor chart swing. You'll hear me say that all the time. If you don't know what a swing is, it's kind of range contraction leads to range expansion. It's going to be a swing. It's where the price actually moves. Within that swing, you'll actually see the signal chart trend within there. There'll be a form of trend, an uptrend or a downtrend within that anchor chart swing. Okay, so let me walk you through what I have here and why I have what I have that's on here. Now, I love using the CHOP RSI. So with just about everything that we can using the CHOP RSI, and that is also available if you go to indicators, and if you just start to, I would imagine just searching on CHOP is what you want to do. And you can see there's version 1, there's version 2. There may be even more than that as well too. But this is for just the basics, which is all that I use on the study. I'm just using version 1. What you'll find is that there's a lot of stuff, a lot of functions behind that, which is we could spend an entire day talking about. And I think we already have. I think we did talk about this like a year ago, like all the different functions of the CHOP RSI. Okay, so that's on both of them, and I'll get into what we use those for in just a second. Obviously, we have price, and what the difference is here, why we have two different time frames. This is what I call the 5x. This is what I call the 1x. The 1x is always meant to be the actual signal chart that you're taking the signal from. And this is an anchor chart is going to be a 5x or 25x, the time frame of the signal chart. In this case, it's just a simple dual pane fractal array. Just a simple dual pane fractal array. Okay, so we've got our price action on here. Now I've got a number of moving averages, and what you'll see is that I've got the 50, the 20, and the 8. This is probably the first time you've seen me throw multiple moving averages, exponentials on. And this is just something I'm experimenting with lately. The idea here is that this creates a stricter form of filtering. This is meant to be a stricter form of filtering. The idea here is, so I've got the 50, 20, and 8, and what we want to do is we want to wait for the full cross, and here's the full cross right there. You've got to have the 8 above the 20, above the 50, and then you've got a trend. Here's where all of them cross, where the 8 goes below the 20, goes below the 50. So this is a swing to the downside. Here's a swing to the upside. All of them finally cross right there. Did you catch the absolute bottom? No. And that's what price action is much better for. If you're trading off a price action, you'll say, well, hell, here is the higher low, and here's a break into a higher high. This is the beautiful thing about using price action, but I understand that not everybody is comfortable with doing that just yet. So price action will always be your fastest way. It's your fastest indicator. It's the most fundamental thing that you can do. So I'll always stick by that, but I realize that not everybody can follow that. Sometimes it's easier having the rules in a more visual format. Hey, I've got the 8 above the 20 above the 50. That must mean it's an uptrend. Hey, I've got the 8 below the 20 below the 50. That must mean it's a downtrend. Okay, just simple moving average. It's not really a ribbon. It's just a multiple time frame. It's a moving average crossover strategy, and we're using it as a filter here. Now, the cool thing of what I've done here is if you look at this, 8, 20, and 50, the moving averages, notice that these on the right-hand side are 40, 100, and 250. What I've done is I've multiplied these by 5 times, and I've come up with these. So these are the same moving averages that are transposed on the signal chart. And sometimes what you can do is you can make these dashed. You can have your own set of moving averages for the signal chart as well too by itself. So you can dash these to indicate that these are the anchor if you want to, or not. You can keep it like this. So that is it. In the case of this, I don't want to be trading long. So what I want to do is I want to avoid this area where things just get really messy. You want to avoid the chop. You want to avoid the areas where price is going nowhere. And in this case, let's see, we have a downtrend all the way until this point here. So this is what we want to avoid. We want to avoid that choppy stuff, and we don't get the full trend change until we get right to here. This is actually a very rapid trend change. And you'll also see rule number 3, which is that descending patterns break to the upside. Here's the higher low, off she goes. And Schuyler could probably tell you about the wave counts of that. Hopefully you guys have gotten a chance to check out the Elliott wave class, which is cool stuff. Okay, so trade in the direction of the anchor chart swing. We get an uptrend starting right here, according to the moving averages. Now the uptrend is right here according to price action, but let's just let that fly for a minute. Okay, so we have an uptrend, which is going to be, if we look at this, we're going to transpose that over to the signal chart. So right at this point here is where I can start to look for long trades. You guys see that? Right there. That's where I have the 8 above, the 20 above, the 50. So we have ourselves an uptrend. Now I can't take, this is where I can now move over to the signal chart. So once I've done this, there's only one more thing that I need to use the signal chart for, which is if we have, let's see, this move here, how's my energy on the anchor chart? It's not so good. It's pretty low. So what that means is no bueno, no enter, wait until you get more energy. Now what happens is we break out. So you have to endure that. You have to endure that and say, oh, I knew that was going to break out, but I'm going to wait for the next signal. You get a pullback into this area, okay, which is the same thing as this one here. So you get a pullback into the moving averages. Have the moving averages crossed at all? No, that's still good. So you're still good to go long. Now, how is that energy? Energy's awesome right now. The energy's great. We have an energy level that is close to 60. So range expansion, range contraction. Rule number 3, descending patterns break to the upside. So now we have everything that we want. We know that this is a consolidation on the 5X chart. We're looking for a trend continuation in this direction. We have energy over here, so that's a check. So all we need to do is we need to see when the 1X chart, the 5-hour, transitions back into an uptrend. Now we can do this through price action. Here's a higher low, higher high, breakout right there. Okay. We can also do this through the RSI Laguerre. We want to see the price break above that level. We've got our RSI hook at this point. We've even got energy on the WENX as well too, even though I don't care about that as much. So we have a lot of things going for us, and this turns into a nice swing. Now, something else that we can look at is what is the reward to risk of this trade. So we can set this up. If this is our entry point, and maybe we're going to set up, so the entry point, let's just say it's 8,600 to be on the safe side. We would want to put a stop down here at 8,200. So this is what's going to represent our R. And if we can get a 2R out of this or better, then we're doing well. Remember, that's the saving grace behind the trend trading strategy, is that it's ideally your winners are going to be several multiples of R, or your risk. And so we're going to have this swing that's up here, and this is going to be 1, 2. This is potentially even a 3R trade. So that's good. That's what you want to do. And here's the next setup. Here's the next setup here. So you're looking for these swings, and that was a 2-day swing to the upside. So again, what you're looking for here is you start out the trade over here. You want to trade in the direction of the anchor chart swing. And you're going to see these swings after the fact. This one's already gone. It's already left the station, hasn't it? It's already gone. And you're already seeing the energy of this swing approach exhaustion. It's not quite down there just yet. If you did get another pullback and a way to get back on here, you could potentially take it, although this would be, you always want to look to get the best edge that you can. The best edge on this one would have been a breakout, perhaps above 9,400. Here's your RSI hook, indicating that. You can alert on these as well too, so you can be told. Now this one would have left the station at 5 o'clock in the morning Eastern time. All right, you know, maybe that's okay for the Europeans. For folks on the west coast of the United States, not so good. Wake up at 2 o'clock in the morning and take the trade. So this is just kind of me, you know, peeling back the onion on a swing trade strategy. They're meant to be simple. You don't want to make them too complicated. So really, I'm not using much of anything. I could use like the RSI component of the anchor chart. You want to trade into direction. So first of all, the trend is in this direction. Rule number 3, descending patterns break to the upside. We've got an upside trend. If you want to, you can subdivide this into Elliott wave. You can use some of the tools behind that. I just like price action. I like to keep things, I'm a simple clod. So you can use this. The only thing that I use down here on this area, let's clean this up a little bit. The only thing that I use on the 5X chart is just the energy as a filter. Do I have enough energy on the anchor chart to power the next trend? So in other words, when we looked at this down here, chopping around, we said, not so good. So even though it did take off on you, and that's what you have to get. You can't chase after these things. You can't chase after them and say, I knew this was going to go. I'm going to jump on board. You're going to take a stop out. You cannot chase after anything. You have to proactively set these things up and prosecute against the trade when it feels, quite honestly, like it's a really bad idea. But when we had this one, we had a pullback against the trend. And you're playing what if, and you can't see this at the time. Remember, if we go over to, let's go over to this. You can't see this at the time. So you can play what if. You can say, all right, I've got an uptrend, It's coming back down to retest the swing at 8,200. That's good. What if this were to break higher from here? Would I be able to take the trade? Well, let's see what we have. Do we have the moving averages? Is the 8 above the 20 above the 50? Yes, we do. Do we have enough energy on the 5X? Yes, we do. Okay, so condition green, let's do condition green over here. Big check for a long, and we're going to move over to our signal chart now. Now we're going to look at this and we're going to say, okay, what can we do to give ourselves some structure to break this trend? Not only do we have a lot of energy here, we have a descending pattern, which is holding up under some important levels here. We can see the 8 and the 20 and the 50 moving average transposed over from the 5X chart. Those are all still where they want to be. We have a potential hook happening over here. And when we have the hook, and then I can say, I could either take this off the hook, or I could say, as long as it breaks above this pivot level here, which is about 8,500, then I am good to go. And that's what you have to do. You have to program yourself in terms of what to do, unless you're going to use a bot. So here comes, there's the signal right there. Let's see, what time was that? That was 10 o'clock in the morning on the 26th of January, Eastern time, US. So that was available to the Europeans, even to those on the West Coast of the US. So that was a widely available breakout right happening there. Did we get a ton of volume there? No. Wasn't a whole lot of argument. Okay, so you're in it, and away you go. Quite honestly, I mean, these are easy to look back in the rearview mirror, but what you have to do is you have to come up with that progression about how you're going to walk things through, starting with the larger time frame, starting with that 5X chart, knowing what you're looking for to either allow you to take the trade. So in other words, if I'm sitting over here, I've already passed it over to the 1X, and I said, okay, guys, Anchor chart team has just passed you a trade opportunity to go long if it breaks out above that level. So signal chart team, what are you going to do? You have to set up your what if, what if the price were to break above 85.45? Well, we go long. What if the price were to break down below there? Well, okay, we sit on our hands and we see whether or not we still have a signal. We sit on our hands and we see whether or not we still have a signal. Now the price did break higher. So this is good for you to do something like this, walk through this. And the thing that you can do is, because I've transposed these moving averages over here, you can actually trade this with one chart. You don't have to have both of them. You can do everything that you need to do, with the exception of determining whether or not there's enough anchor energy here. But you can look at this from a price perspective by transposing the moving averages over to your signal chart to allow you to just kind of walk through these things one by one. Okay, like let's look through the next one. So here's the next setup. All right, so let's look at this. Do we have enough energy? Do we have enough energy? Do we have enough energy? Not really. Well, the anchor chart, as long as we have over 40 to 45, I'd say is the minimum level that we want to have on the anchor chart to power the next swing. And we did have just enough there. And so the 1X team could say, all right, if we break above this level, or if we have a 1X hook over here, we're long. So that one fired, what, this morning? No, that was the 5th of February. Sorry about that. And that was an early morning trade. So those are tough to get. Those are tough to get unless you got some kind of a bot. Okay, any questions, guys? So we talked about trend trading. That course is out there. I've given you a couple of new things to think about here, and just in terms of moving averages. You don't have to use those if you don't want to. But if you have trouble determining what the trend is, what is the anchor trend, right? You want to trade in the direction of the anchor chart swing. Which way is the swing? Which way is the trend? You can use exponential moving averages. Use 3 of them. Look for the crossover. The turn will be delayed. You'll delay the turn by using multiple moving averages. But once they do all line up, you should have, if there's going to be an extension to that swing, you should be in good shape. Okay, guys. I think we are just about set here. I think we are done for today. So if there are no questions, or if you're watching this on a replay, you can certainly email me a question to support@ReadySetCrypto.com, and it will find its way magically into my inbox. Or hit me up on Discord. Guys, you guys have a great Friday. Thanks for hanging out with me for today through the strategy session. And you guys take care. Have a great weekend.